Hi guys, welcome to another video by Optionables. My name is Ayush and I'm a trader. In this video, we'll analyze Nifty and Bank Nifty, and along with that, we'll also discuss how HDFC has literally turned the tide for Bank Nifty in the last week. So now we'll go to the screen recording, and there we'll judge on what level basis either we can decide whether it is range bound market, level trending market, or even bullish market. Hi guys, welcome to the screen recording. So as you can see that in the last video we had discussed that Nifty, until and unless it is going to cross below 21,500 or 21,450, we are not going to see much of a bearishness. But what happened last week was some sort of event driven, because HDFC results came and market reacted very negatively. HDFC Bank on the result day went by 8-9% down. If you have to see, we can just go there and analyze that stock also for a while. So you can see one thing which is very clear, that from a stock which was at 52-week high, nearly 52-week high, you can see that the stock has nearly come to 52-week low. So what happens when results are about to come? In two terms we have to discuss that. First one is how much weightage a stock has in the index. So if you have to see for HDFC Bank holds around 31% weightage, which is nearly like one third or one fourth of the index can be moved by one stock only, and that particular stock in one day goes down to 9% or 8-9%. And the best part about somebody who is simply selling OTM options, because Wednesday was expiry and we had Tuesday one day before the results, and you would have got 1% OTM options like puts at 28 rupees or let's say 30 rupees, which looks very good. But in such case, when a heavyweight company's results are supposed to come overnight and you can't predict, because most of the time what happens is before the result the company or the stocks will go up, company will come up with good results and the market will dump the shares. Or it can ulta also, it can happen that the company's results will come bad and the stock will gap up or go up. So results are very unpredictable, and there's a saying that markets can remain irrational until you are not insolvent. So that thing matters a lot. And why I am discussing this, because when we make videos, we are making with the intention that for option trading it helps us. So the crux I want to tell you here is, let's say somebody on 10 lakh capital would have simply sold full capital puts of 1 or 2% away from the index, and for 10 lakhs you can go as high as 8 lots. So 8 lots into 30 would have been nearly like 1% on the higher end, or half percent you would have made. But the index itself became 4% in the money, so that 1% OTM puts will become 3% in the money. And that day particularly, if you are full capital short on puts without any hedge, you will be losing around 21 or 22% of your capital. So that is something which you don't have to fight unnecessary. And Charlie Munger used to say that you don't learn not to pee on electric fence by doing it. You can simply use your common sense and not do it. So coming back to Nifty and Bank Nifty, again we'll go and analyze how we can trade the coming week. So Nifty has been strong comparative to Bank Nifty, because in this gap up or the breakout after which the breakout came, generally Nifty could have gone higher and shown the strength. But that day, Wednesday, HDFC results came and HDFC took Bank Nifty down. So because of that, Nifty also went down, because banking exposure in Nifty also is comparatively good. And you can see that next day we saw a gap down, and from that day 2 days are inside bar. So in such cases, whenever you see a very big range in 1 or 2 days, simply to trade that is to mark the high of the candle and mark the low of the candle. Until and unless this range is not taken out, don't take a directional bias irrespective of what has happened on this particular day, because that was results driven. If let's say tomorrow ICICI Bank results are yet to come overnight and Monday we have a holiday, so if results are supposed to be good as how badly HDFC turned out, it can again gap up. So that is unpredictable. Price action will help in nothing in that segment. So we have to stick to risk management, and whenever there are results, and you could assess whether the results market is taking in well defined way or not well defined way, because you can see from last 1 week, whichever company is coming with good result, either the stock is going 10% up, or whichever company is going bad result, the stock is going simply lower circuit or falling more than 5-6%. So in that case, taking an overnight position can be very dangerous. So simply we can avoid that, because if our intention is to trade for next 5-10 years, this is not going to matter much. So now coming back to Bank Nifty also, you can see one thing, that so this parallel channel which was here, we saw a gap down, and simply there's one concept called gap runaway or gap on the upside, gap runaway or gap runaway on the downside. So generally whenever a stock breaks a range with a gap up, and that particular day's candle's low is not taken out, the stock does well. And simply you can see this, that whenever a range is broken with a big gap down, and that candle's high is not taken out until and unless that particular index is weak. So what we can do is, for our reference, we can mark 46,600 on the upside and 45,400 on the downside. Until and unless this level is not tested or taken out, we don't need to take a directional bias. Maybe what we can expect is the market test 46,600 once again, and if the banks have to do really bad, that can again go down. But one thing is very clear from the last 3-4 days or 1 week is HDFC is taking Bank Nifty down. Because from a valuation point, if this company was supposed to be very good, a 9-10% in one of the highest, biggest company in the Indian stock market, people would have started to accumulate. So generally, whenever you see a 9% fall and then again a gap down of 3%, and you see next day stock gap up, but again it went down. So there is no signal of stock getting a strength. So don't rush to buy it, see some accumulation, and then if you want to buy, you can buy, because the market is currently in a ferocious bull market. And if you simply stick to buying the likes of HDFC or Kotak, you will end up missing what is happening on the 52-week high or all-time high segment, because stocks like from PSUs are done very well, stocks from railways have done very well, so that helps. So this was our analysis for this week. If you like this video, like, share and subscribe to the channel. Thank you.